Ladies and gentlemen of the crypto space, we're live on a Monday, December 23rd at 11:31 a.m. Start of the week. We're just before Christmas, and it's certainly not the end of 2024 yet. We all have the things on our mind, what's going to play out in 2025, but we got to get through 2024. And there's a lot of complexities. There's always complexities. There's always things to consider. As I tell everyone every day, it's imperative to recognize and appreciate that the system is always ready to fall apart. And we got to look for signal through the noise. There is turmoil internationally, foreign currency markets, South Korea, Brazil. It is not all golden bows and Christmas doves, or so pick a phrase, some sort of cliche phrase. It's not all peachy keen. There's some shit going down. There's always some shit going down. And we can see it in the data. So when you look at the Bitcoin chart, you're looking at the wrong chart. Nice to look at the Bitcoin chart. It gives you a sense of where things are from a crypto micro perspective. But you want the macro perspective. You want to understand what drives the Bitcoin chart and in turn downstream beta. And you could probably argue still to this day that Ethereum and the varying EVM networks and all the further downstream beta, everything's beta. Everything's beta on top of currency. So currency is in a predicament. And you can tell right away when you look at the DXY at 108,172. It's predominantly Euro and Japan. And you could look at cross currency pairs, but this gives you a nice broad capacity to inspect the state of the system because all the cross currency pairs go with the yen and the euro as well. So this is not pretty. Not pretty at all. And this is why we've seen a retrace over the last days, if not a week and a half. Um, Nothing's going to hold up with the dollar doing this. Everyone sees this data and this critical level that was set back in October of 23, which is over a year ago at this point, was breached, rejected, and then 1 month, it took an entire month of potential rejection to the downside, which is a good thing, for it to breach to the upside. And now we have days of it trading above a critical resistance level. It's a big deal. Everyone's looking at this, and this tells us the state, the health, or the relative functioning of foreign economies. And this means a lot of other countries are under pressure. A strong dollar sets up a situation that is price destructive. The dollar shortage is a common terminology that floats around. And when you need dollars, what do? You sell shit for dollars. And when you have a strong dollar, this is recursive. So when you have a strong dollar, that makes the dollar stronger. It requires more selling. More selling to buy dollars drives up the price of the dollar, which requires more selling to buy dollars. You see what I'm saying? So when the dollar goes up, it likes to really go up. So um, the fascinating, let's zoom out to the weekly. It's a fascinating chop. We haven't seen chop like this in quite some time. Surely not between 18 and 20. That wasn't chop like this. This is just a gradual appreciation of the dollar through those 2 or so years. And even between 15 and 16, I mean, it's like a micro compressed version of what the hell we're going through right about now to a degree, except not at critical levels. Just so happens that that big green line is a very critical level that goes back a long period of time. That was a resistance back in 1976. Generally speaking, we still don't know what's going to play out, meaning every time you go above that green line, you tend to have a rejection over a period of time. But what comes first? Systemic dysfunction. Clearly, back in the 80s, there was insane systemic dysfunction. That was a massive move, and it took years for it to come back down. 1981 to 1986, that was 5 years back in the dot com era. It was 2000 to 2002. Back in the COVID era, it was basically a couple of months. Excuse me. And now we are breaching that 108 line again, 107.35 to be specific, and it's an uncomfortable position. Um, Policy indicates that this should roll over, but policy isn't always in control. Policy is often reactive rather than proactive. So, what does that mean? Basically, shit tends to break, and then they try and fix it. That's you know history 101 for how these things play out. Something breaks, and then you get '08 TARP, you get you know BTFP, and then uh, 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 all the basically Fed backstop, and that is the last thing they want to do because that sets a bad precedence, and they've obviously wanted to clear up that bad precedence for a long time now with their rolling over of the balance sheet, the Fed balance sheet. They have been trying to contract it to the best of their abilities, but they're just not in control until you think they're in control, and then they're proven to not be in control. Round and round we go. Who's in control? Now, they've done a lot of things post 2020 to try and suppress volatility. They have the historic swap line type of arrangements with nation states, and they have the new Depository Trust Clearing Corporation and trying to centralize the settlement of U.S. debt transactions, which gives them the potential to slow transactions. It's a centralized clearing house of sorts, and that could potentially be used to minimize significant volatility events. Um, and these are the things that I think about. And right about now, with the dollar at this level, it's reason to be uncomfortable and move perked up a little bit. You feel more comfort when the dollar is rolling over because that means geopolitically they are colluding to drive the price of the dollar down to allow other nation states to actually have a functioning economy. The DXY rolling over indicates other nation states are in a position to expand their capital using United States debt primarily as collateral, and that gives us our booms and our busts that everyone is familiar with. Um, you know what we're looking for from a macro standpoint? We're still looking for the dollar to roll over, and it has not. We're looking for the move to roll over, which it has not. If anything, they've perked up over the past week, which is why we see the market weakness that we do. Taylor making a big Monday buy, but Bitcoin's price is still going down. 92 and change now on the day. Let's zoom into the get some granularity. Reset. It's a position of weakness. Anytime you're coming down from the top, you're in a position of weakness. At the bottom of the guppies, support. You don't want support. Support is 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 what you want if you are the risk taker. BTFD, buy the failed dip. You want to buy support, but that's when you have a bullish macro backdrop, like moves rolling down below 80. It's going into the 70s, 60s, lower lows, and yeah, there's a dip because people are taking profits, but macro is a tailwind. Right about now, with the move in the DXY where it is, macro is a headwind. So it's not constructive position to be in for buying the failed dip type of mentality. Um, from an investor mentality, you still have beta plays. And you look at AWA and look at Spectra going absolutely ballistic. Bit of a digression, but we could look at them real quick. 100 mil on base. It's up. Is that up 31% on the day? And it's at 25 mil market cap. Microcap assets. The 600K in liquidity, ladies and gentlemen. So this is the type of thing that flips really quick. This is the type of thing that I wish I bought a 5 mil market cap and you're sitting on 500% and you don't give a shit if it collapses 50%. That's the investor mentality. That would have been the discount. That would have also required allocating capital to a new asset, and that is something that I tend not to do. Also doing well is AWA with its launch on centralized exchanges, massive wick to 15 cents, up at 12, up 34% on the day, 121 mil market cap. My takeaway from all this is healthy downstream beta for these EVM networks, and more specifically the Curve Federation. And that is something that I'm emotionally sitting with. I don't chase. I like Spectra. I like their conversion. They were from AP Wine originally, and it's a sort of pendle. And I think it's going to be very interesting what it does for the Curve Federation. It supports it. It allows for um, optimal consumption of S money and SCRV-USD, and that is something similar that AWA does, not with regard to the dollar products, but with regard to cross-chain arbitrage and liquidity provisioning. And it allows for provisioning of those dollar instruments as well as um, the volatile assets that are exchanged on base curve, the base curve DEX. Um, so these are all ancillary products that synergistically support the entirety of the federation. So that's why I keep an eye on them. I'm not buying premiums, but this is good to see. When I see things like this, I see obviously like thoughts of a zero sum environment where there's capital in these markets and the capital is churning and trying to find where it is best served. Um, And clearly, with this type of appreciation on a relatively weak day, especially considering macro, you're getting a concentration of capital into the things that market actors are choosing that they're seeing as being successful, as being constructive and innovative and part of something meaningful in these crypto markets. So that's what this appreciation on a day like today means to an investor like myself. We could go to the chart and the watch list and see what's outperforming, which is Hex. I keep an eye on it for whatever reason. Uh, Gamma is something I kept an eye on. Not something I'm going to talk about right now. Links, neither. I'd rather look at Nile. Nile flat, buck 18. That thing was up at a buck 20 when Consensus bought their clip. Cleve, flat on the day, 14 bucks, still up nicely. So that's the beauty of the discount. When you buy at $6, if it goes to 27 and collapses to 14, you're like, all right, I'm still up 3x on the money. So if you get the discount, it gives you luxury, affords you a luxury to just relax and let the thesis play out. And the thesis is not just the price of a token. The thesis is the technology, the consumption of it for productive purposes and meaningful purposes. And we have strong theses. So, what we look for in days like today is a capacity to just relax and understand a bigger picture other than just prices getting chopped around and obviously shaking a lot of people out. We could take a little bit of a stroll down data lane and see how that looks in number form. If you look at DEX volume week over week, marginally positive sum. Hmm. Leads and lags. Is that a leading indicator or a lagging indicator? Because we saw some nice dips in volume a week or so ago, 30% across the board, pretty much all the EVM chains. And now we're seeing a positive 10% week over week. That could be your trough with regard to volume and financial activity. Solana, marginally positive sum. I haven't looked at this in a couple of days. It's nice to see it at least flat. Clearly, we were up high, $2.5 billion in volume on base at the beginning of December, now down at 1.6, but at least flat week over week could be a leading indication of a potential trough forming across the board. Look at these. Look at this. It's not negative sum. It's not zero sum. It's actually a positive well, from a volume perspective environment, and that's what we want to see. We could look from a stable perspective to see negative, positive sum. Let's take a look. 110. So look, it's a little bit flattened out a little bit. Let's see what the previous tick was. 109. All right, less than $1 billion in a couple of days. It's what does that mean with regard to breadth? So when things are rolling over from the top, you're moving up 10% a day, 10% a day, then you're moving up 8, 6, 4, and you get that rolling top. That's not necessarily going to play out from a this type of metric perspective. That's more of a price action type of inspection. But you could really see if you're not moving $1 billion a day, which Ethereum was for the entire month of November, you're gonna get very different price action, which is going to carry over and roll over and have knock-on effects into price action across the entire crypto markets. As a massive amount of money, $110.72 billion in the beginning of November, we were at 83. That's almost 26, $27 billion worth of capital inflows. And I think about that all the time. The capital, I don't think we've seen a 30 bill on 80 is less than 50. That's what 40 something percent increase in stable coins in a little over a month. We haven't seen that free capital translate into price appreciation. That is a monumental landslide of capital. So we haven't seen anything yet, in my opinion. I think from a structural perspective, capital inflows have been staging, preparing. You deploy capital like you move. If you see something going on in India or China or Britain, you move capital overseas first from a macro standpoint. You're like Q1, Q2, and you're thinking a couple quarters in advance. And you're like, all right, we're going to move capital over there in advance of the market being in presenting an opportune investment situation. And that is something that I think this data is representative of a front running of capital. The capital is here. You don't have to wait for a wire transfer. The capital is already here. Therefore, they can deploy much quicker. And that's a massive, massive amount of capital. Um, all right, we looked at that. We looked at this. Move 91.75. Zoom out. So it's still at a very elevated level. I'm This is nothing to be comforted by, especially when you see wicks like this through the 200 on the monthly. It's showing every time volatility has a capacity to be suppressed and calm down, something pops and something gets uncomfortable, and that primarily means some sort of situation overseas with a nation state's economic system. Gold relatively weak at the top, $2,600. I don't think this really indicates much other than, forward looking. If there's a massive fiscal stimulus bill passed or something, and you see a structural debasement coming, and then gold will respond. So I don't expect fast moving gold action in the short term, but it's something always good to watch because if you see gold respond quickly, those are the folks that usually have a sense of what's going on structurally, politically, geopolitically. Um, they're tapped into different types of conversations and communications. Oil 68, less than 70. It's not significantly volatile, especially from like a high time frame perspective on the monthly. You see a breakthrough like the 100 on the monthly, and something is awry. When you see significant volatility in oil, that moves the price of currency, and currency gets politicians into gear and causes them to act and respond. That balance sheet basically flat. Um, Nothing to take away from here specifically, other than um, I expect relative continuity from Fed policy. 25 basis point cuts. every FOMC. That's about it. Nothing special. And maybe well, obviously that's their goal to keep a relatively calm economy. The goal of the regulators is not the volatility. They want it to be relatively tame, and frankly, they're achieving it. So they're achieving what they want to achieve. Whether when we get that volatility, whether we get that volatility, I don't think that's really the question. Is when we get that volatility, we all suspect it to be to the upside, but please do not discount that it could potentially be to the downside. Curve back at 87 cents after one heck of a dip down to 69 in Guppy's area. So this is consistent with the decent retrace. 132.70. That's a nice dip, but look, that was literally just a traversing through the Guppy moving averages. So it's a nice level to be at. Previous resistance back in March of 24. You could zoom out a little bit. That's all we're going to get really the weekly. Don't want to go to the monthly on curve. But what's nice is that we're above the 100. That is a massive, massive moving average level from a weekly perspective. We haven't interacted with the 100 since 2022. And after moving below the 100, it was weakness, 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 not even close to interacting with the 100 MA on the weekly until March of 24, which was just a rejection over a 2 week period. Big weakness. We had our blow off bottoms, big liquidation events, and we pushed right through it like a hot knife through butter, smacked right into the 200 on the weekly, as well as the 200 EMA in this little line below. And obviously, with the shorter term inspection, we're having guppies as support. It indicates what everyone knows that there's a great interest and the sentiment has significantly changed in the curve, or rather with the curve federation, considering its contribution to the overall structure and financial activity in these crypto markets. It's going to be one of the key or critical destinations for capital, amongst others. Like the velodromes, the aerodromes, and a lot of contention going on base right now. It's not too clear what the hell is going to play out. We'll see when Kingdom V3 comes online. I'm curious to that, but literally Camelot and Arbitrum is kicking everyone's ass, and frankly, Uniswap is still in the lead. So that is basically like, I would say, still up for grabs territory. You go over to the data and you go over to volume, you go over to optimism, which is -7% week over week. Velodrome is still strongly in the lead on top of Uniswap. So this is a big narrative shift, ladies and gentlemen. Very big narrative shift for things like this to occur. Are they still in the lead on base by a very similar multiple? So that tells us a lot about the significance of this protocol in the functionality of the economics on the respective chains. With Sonium um, and Ink live, or rather Ink much more live as compared to Sonium, but Sonium's still part of the narrative. Um, Ink, I think, is a tailwind. It's going to support uh, the potential price action of Velodrome, considering its inevitable significance on the Ink chain. The only reasonable inspection is that Velodrome becomes on Ink what Aerodrome is on base, and Kraken uses the Ink chain very similarly to the way Coinbase uses base. And that might be one of the biggest narratives in these crypto markets. You could chase downstream beta all you want. I mean, obviously, still Velodrome remains ETH beta, which remains Bitcoin beta, which remains basically macro beta and global currency supply beta. So it's beta of beta of beta. But it's one of the most interesting and definitely one of the most grandiose narratives in these crypto markets. You know, what would be my takeaway of how big scale and scope of optimism and velodrome is in the context of other things that I've historically said are large in scope. I would say at this point, what Velodrome has done with its cross-chain implementation and across the OP stack, gives me vibes of what Frax has done. And Frax is working with BlackRock at this point. The potential for capital inflows, it, that's crazy. So and just Frax retains that narrative of just monumental scale and scope, central bank of crypto. That is what Sam always talked about from an intent perspective. And I think if anyone has achieved their intent, it is Sam and the Frax team. Clearly not reflective in price action, but that is the classic definition of a mispriced asset. Just remember being early is often indistinguishable from being wrong. Things remain mispriced until they're priced, and you never know when they're going to be priced correctly. So that's the scale and scope in my 2 cents of where Velodrome's at. That's just pretty wild how it provides such core critical infrastructure to the optimistic superchain stack. That is what else is bigger? I mean, everything is isolated. Like literally the three biggest narratives in these crypto markets have to be basically Velodrome at this point, Frax, and Curve Federation. There was a while when it was just Curve Federation, which was the hallmark of the conversation that we had, because that was the largest structure, the largest coordinated effort of synergistic protocols all operating in terms of what you would define as a federation. But but that's to a degree what Velodrome has now with itself, which is kind of like the point of what Solidity was, a self-contained federation, bifurcation of incentives, and just I wonder who's accumulating Velodrome. I would imagine like all of them, all of those like F bomb and all the protocols that are dependent on it have accumulated it. We do have data on that actually. You go over to DeFi Wars, and you go over here, you go to Velodrome, Millennium Club, one of the dominant owners of Velodrome, which is F bomb. Ah, Inverse Finance, Synthetics, Alchemix, Stargate, these big owners. Oh, there was a big buyback. Velodrome bought back 22 million Vela, couple $1 million right there for public goods. I mean, it's just it's an altruistic statement, obviously. That's a very nice narrative to bolster liquidity on what? It's downstream chains on Fractal, on on Ink, on Sonium when they roll out the red carpet. Eh, hard not to get excited about these types of things. OpenX has 6 mil. That's probably just deposits of the NFTs, maybe. Anywho, those are the three big things now. So that's kind of like when we talked about the five businesses in crypto markets: foreign exchange, credit, derivatives, liquidity, financing, and help me out here. Liquidity, financing, and dollar liabilities. There you go, all five. And now, for historically, it was just three: foreign exchange, credit, and derivatives. We expanded that. Now we expand what are the biggest narratives in these crypto markets, and I'd say still remaining is Curve Federation at the lead. It's just such a massive synergy of so many protocols, crazy, with a dollar product at the helm. Just very important for everyone to understand the Curve Federation isn't an exchange, or the core narrative in it isn't an exchange. The dollar product is at the helm of what's most significant there from a fintech product offering. Okay, just to be very clear about that. Frax, though, just I don't even know where to be. Frax, just literally central bank of crypto. That'll take some time because that's a lot for folks to digest. And just Velodrome, that's an exchange, but it's also liquidity financing. Ah, You always have to identify what the business is. So always go back to those five businesses. It's one of them. And what is the biggest of them? Dollars. Okay. All right. Let's say hello. DA advisor in the house. Much pleasure. Good morning. The cap. Appreciate you, my friend. Tapsy, what's up, y'all? Connect the dots, what's up? Teddy, usual, De Silva, good morning. Arrow, hello, my friend. Teddy, if you consider asset purchases, why do you recommend not locking during the bull? Um, so if y'all didn't see the new rules in 2025 regarding capital gains, it's an absolute disaster. Um, so accounting is one of the biggest burdens in these crypto markets. I've spent the last 2 years just trying to position myself in a manageable way. And I'm not in a position to manage capital gains, like holding anything. So, all right, fine. If you wanna, I mean, locking, I guess, would be consistent with not wanting to experience capital gains. But the problem is, if you lock at a premium, you're locked in. And we had our discounts. And if you could get Velodrome at 6 to 8 cents, that was astounding discount on the discounted NFTs. If you could get Curve at 20 cents, 25 cents, all right, discounts. So do we revisit discounts? I have no idea. But generally speaking, on the way up, what's the odds of the lock price being lower than the next speculated higher low? And that's the equation. So I would say, and my rules are all revenues, all receipts during the bull market go to stablecoins. And you accumulate the cash pile like Warren Buffett. At some point, you get Pico Top and everything rolls over. You don't know when it's coming. And you're sitting on a fat pile of stablecoins. You win because you're sitting on the stable coins. You have simplified rules that you don't lock during the bull. You're sitting on the stable coins. Everyone's panicking on the way down. They're trying to say, oh, it's going to be a higher low. It's going to be a dip. And it doesn't stop dipping, just like we experienced in 22, 23, and first half of 24 in altcoins. Bitcoin obviously bottomed in Q4 22. So it's just about rules and being consistent. So my preferred rule is everything goes to cash in a bull market. It's exit liquidity. You're capitalizing on the way up. Capital. Everyone's like, take chips off the table on the way up. Yeah, if you take all your cash flow and buy Bitcoin and Bitcoin goes 2x on the money, all right, you doubled your stack. Do you know when the top is? No. Now you're resorting to capital gains and you're making an accounting complexity. So accounting is very critical. Most just ignore it. Most folks do not do accounting or probably pay financial obligations to regulatory authorities, to be specific. Um, but that is something that I've appreciated much more over the last years, and I have prepared myself as best possible. And I still am preparing myself to this day with some recent commentary in the trust section on Discord um, about changes that are going on in 25. I mean, you can run all that shit through software, but you better have an isolated account. But if you have an isolated account, how the hell are you going to get basis into that account? So the tax software, it's an absolute catastrophe trying to get basis, especially historic basis going back years. What it's a catastrophe. It's impossible, and you will be frustrated. So a good part of the way I think about managing things is based on accounting and keeping things as simple as possible. And I've determined that everything, all claims need to be sold for cash or stablecoin specifically, which is cash in these crypto markets. That's it. There's no holding anything. Other than like if you have exposure to Bitcoin, but you better make sure that's like in an isolated account and that's some hodl shit, some Bitcoin maximalist mentality. You should have that. You should have exposure to that narrative. Um, and then if you're going to do buying, it's all because you've accumulated dollars and you're making a purchase. There's no, there's no, you have to record basis when you make that purchase. But good luck with all these complexities, man. You guys got to keep this shit simple. Otherwise, I'm not too worried about too much backlash down the road. I think there's just 20 million people in this country that have done zero. It's an absolute disaster from an accounting standpoint. So what I would say is I strongly encourage everyone to pay attention and to have a plan and to have a strategy and to have rules, document those rules and be consistent with your rules, and that's the measure of success. The measure of success isn't how much money you have. What gives a shit how much money you have? And I guarantee you, if you had $10 million or $100 million, you really shouldn't give a shit how much money you have unless you have an egotistical type of complexity from a psychological standpoint. What you should care about is your sanity. And sanity is completely dependent on your capacity to manage and maintain and execute consistently. Sanity is everything. So keep it simple, please. Usual the Silva, itchy to buy more curve. Well, we looked at it, you know. I don't have an opinion on such a statement to buy more curve. I am fond of it, and I think exposure to it makes sense. Um, I have a high opinion of it being more valuable in the future. The question I think folks should ask is, do we revisit structural lows? Let me give a Bitcoin example. This is something I've done historically. So back with our previous highs in 17, we revisited marginally lower. Previous highs in 17 were about 19, and we bottom ticked to about 15.5. So bear market bottom, the low was marginally lower than the previous high. So for instance, previous all-time high was 69-ish, give or take from a monthly perspective, breached through. So what if you go like this and it dips down to, I don't think it's going, maybe the 70s. I don't see 50s. This is obviously a logarithmic chart. But what if you buy, if the ass gets kicked into gear at 125, 130, and you're like, oh, it's at 100, it's at 70, and you're all up the emotional response. But where is that dip? Because obviously you're not going to see the dip on a monthly chart, but where is that dip? You don't see it here either, but you see it here on the weekly. Where's that dip where the low? I'm going to draw this for not for my speculation. I don't think it revisits these levels. Where's that dip if it comes lower? And you don't want to be in that situation where you bought a dip and it ends up going lower than your dip, a relative lower low to your entry price. So you want these discounts. So peak fear. Oh, that was some peak fear. 20 cents. People were pissing their pants. Anywho, I have no idea where it goes. I have no idea where Pico bottom is. I have no idea where a maximum discount is. And all you could do is measure these types of things from hindsight and live with the decisions you make. Very fortunately, or for fortunate for the lock mechanic, you have to live with those choices. When you lock your assets, you don't have a choice. And to me, that is offering sanity, because otherwise you're worried about, is it going to go up or is it going to go down? But if you lock, you don't have a capacity to do anything either way. And to me, that affords sanity. Hope that helps. Sir Joe, present and accounted for, sir. Yes, sir. Yes, sir. AeroV now gets the VE Solve airdrop. Well, obviously, we're going to get fat VE Solve airdrops given our exposure to the V33 ecosystem. I look forward to Sonic exposure. I look forward to Solana exposure for VE33. I don't know if those folks are capable of engaging with VE33. It's literally just coins. There's no sophisticated financial activity on Solana, which is very similar to the base situation. Albeit Airdrome does very well on base, dominant, owns base for what it's worth. So maybe it's a big deal. And very fortunately for us, we get free exposure to VE. So we'll know more soon enough. Diego, hi. Cap, do you think that a trust structure similar to yours is possible in Europe? Different rules. You gotta know the rules. Yeah, I would imagine there's plenty of rules that allow a structure that affords sanity, but affords simplicity and gives you a capacity to contract. So Hale versus Henkel, 1906 in the U.S. The individual has basically an unlimited right to contract, meaning we could write rules for ourselves, and rules for engagement with regulatory authorities, rules to respect state and federal laws, and these are as meaningful as individual rules. Our rules carry weight, especially from a trust perspective. Um, it's a distinct entity as compared to corporate or personal in the US. And I think that my carefully chosen statement would be to use AI to do your due diligence. Uh, and I would encourage that. So ChatGPT could do anything you want, and it'll take time. It took me years to write what I wrote to understand it, what they offer from a legal perspective, the way I understand it. Um, so it's definitely a journey of understanding what can be done, what options are available. And that's the most important thing that I never realized. There's options and choices in the US. Corporations suck. Don't ever do it on a 10, not 1040, but don't, not personal. You don't run this shit through personal. Those rules, those tax rules suck. Like literally, the trust rules in the US, that you want to run things through it. There's very different rules, and you want to use your rules to your advantage to the best of possibility. So whatever jurisdiction you're in worldwide, you should always research the rules of the game and use the rules to build the best possible structure to preserve your sanity and simplify your operations. My 2 cents. What did we get it for in pre-sale? I don't know. I don't know. I didn't acquire. I have no exposure to AWA. I have no exposure to Spectra. I had the reason why is because I had or have still X amount of capital, free cash, which I define as basically Bitcoin and stablecoins, and I don't want to part with that cash. My goal is to end 2025 with a nice amount of cash to be able to finance my family, my daughter's school, and everything, mortgage and cars and everything. So I need a certain amount of cash because at some point I expect things to collapse and roll over and contract, and you get the bear market and you get the deflation and everyone's panicking. And if you're sitting on a bunch of cash, you're not panicking as much. Clearly, you get the deflation of the portfolio from a total net worth perspective, but you're sitting on a fat bag of cash, and you could pay your bills and buy a discount when you look at the macro indicators, and you see move blow off to like 300 next time, and it finally rolls over, hit the macro bottom on some Bitcoin. You allocate some capital there. You can't. Cash affords choice. So very important. Very important. Um, mix. Watch that hex. I watch it because it's a hot potato, especially with Richard and it's his Interpol warrant. Just what a story. Um, Never want exposure to it, but that's okay. I'll take a look real quick for the fun of it. Let's go out to the monthly if it loads. It's just a spicy story. Such an remarkably strong community that are locked with immutable contracts. So that's notable. There's no federation. There's no federation, and I think the community is missing the point. Like total net worth. Where's the fintech? Where's the product offering? It's just about money, but it's not money. But guess what? It's going to be similar to the decaying emissions over time. I believe it's the disinflationary emission schedule. So 10 years, it could be significant price. But that's the thing. I don't care about price go up. I don't care. Like if you have $100,000 portfolio and your hope it goes to 100 mil, I'm that guy. It's like I just want a mil or 10 mil. I don't care about total net worth at all. I care about sanity. I don't want to make as much money as possible. I want a manageable implementation that's rules based. So I think that's just generally a community I don't want exposure to. That's my 2 cents there. Plus, catastrophe from a chart perspective. I don't even know. This is a wrong chart to look at, and probably a wrong, a spicy topic to pick up. And I don't like getting contentious. And so many folks are so um, tribal when it comes to things, and that's the last thing to be. You want to be tribal about understanding the way the system works. The system being the global financial system, because that's what matters. Okay. Post chain, don't, yeah, no, I'm gonna sleep on it. Thank you very much, my friend. I'm dead asleep on it. It's okay. You're gonna watch so many coins go multiples to the infinity and beyond. Uh, Fartcoin did very well for a lot of folks, down 40, 50% at this point. And you're gonna see Hyper probably do crazy things. And look at Spectra and AWA doing really well. And folks are gonna FOMO the shit out of everything. But I guarantee you, my friend, I am gonna sleep the shit out of it. I'm gonna sleep. I am dead asleep. Not a bad thing. If that's folks' bread and butter, that's all good. Whatever it is, be consistent and stick to the rules. And what happens will happen. I just prefer my what happens will happen be based on macroeconomics and fundamental financial um, structure and properties, credit, derivatives, fintech, foreign exchange. Papsy, could those billies of inflows also have to do with funds like Build? Um, no, because this is primarily Tether. If you go here and you go to Ethereum, Tether the dominance 58%. It's all Tether, $64 billion in Tether, and USDC obviously, and marginally Athena, and then everything else is just relatively marginal. Take yeah, yep. Please, I'm not looking at it. Curve sat perfectly on long-term holder support, guppy entry. Yeah, in theory, support is what? Support is a position of weakness. But a concept in the house. Much a pleasure, my friend. Much a pleasure. John T.O., great to get my daily dosage. Curve hopium, I'm ready. Yes, indeedy. A little bit of hopium across the board. I see as I started this stream, a bit of weakness in the markets. DXY at 108, move at 91. We can have our hopium. It's not what what have I said for years now? It's about the cash flow. How's your cash flow doing? December versus November, November versus October, October versus September. How's the cash flow? That's the measure that matters. You don't retire on total net worth. You retire on cash flow because you can bank on cash flow and you can make decisions based on cash flow. When you have total net worth, you're like, well, what am I going to invest in? Now you have to make choices and decisions. And choices and decisions, my friends, are a burden and responsibility. And I want to avoid that. Earth to the moon, yes. I think we all get excited about it as well. In terms of trust in Europe, the biggest issue is HEMS in Europe. You can manage HEMS in Europe like you're able to handle. Oh, you can. Okay, so yeah, that's a major component of it, and that's very, very nicely or specifically mentioned with regard to what's possible in the States. So HEMS, health education maintenance support, with regard to minor beneficiaries, technically adult beneficiaries to a degree, and arguably trustee. So in the US, um, I've come up with some crafty structure in the business where you have an unlimited right to contract, so you could define administrative obligations. So it's non-optional. It's defined as part of the business structure. So it's not like it's discretionary. It's not a choice. And trustee discretion is a big thing that gets attacked or can be attacked. But if you eliminate discretion and things are mandated, it changes the equation from a legal standpoint. It gives you a stronger argument. Everything in law is about an argument and strength of argument. So HEMS is meaningful because if you're accumulating principal, non-monetary entity distributions allocated to principal, okay, well that's favorable. Um, all of a sudden in 2025, we have complexities with regard to basis and not accounting, but accounts handling, like Ethereum addresses, so on and so forth. I don't know how the hell that's going to play out with regard to coin control and how Bitcoin handles um, what's it called? It's remainder transactions. Um, not the same way it is on a EVM chains. Uh, I mean, Bitcoin literally, when you send like, if you have $100 in Bitcoin and you have $1,000 in Bitcoin in an account and you send $100, you're literally sending the whole $1,000 and you're getting 900 back in a new address. So that's really good with the original inception from a security standpoint, but from an accounting standpoint, Christ, managing those accounts must be an absolute disaster. Tracing them and tracking them. Anyway, so HEMS, um, the biggest thing about trust is kids. So financing, health education, maintenance, and support for kids are arguably administrative obligations, especially if codified in trust documentation. So that makes them deductible expenses. Health, medical, schooling, extracurricular activities, health being food, good food, uh, living conditions, clothing. So that is the type of argument that is available in the U.S. as deductible trust expenses. But that's based on the rules, and you need strong ass legal wording to support that type of treatment. You need a strong argument, and the most insane thing about law is that everything is a case by case basis. Like, because everything would be presented in its form, substance over form. So what is the form of the entity that was created? And that gets presented, judge inspection, jury inspection, and they're like, all right, this is this case. Every case is unique based on the structure created, and the structure is a manifestation of words on a paper notarized. Literally like compilation or coding and then compilation of in a way. Anywho, digression, but as you know, that's a very interesting topic close to me. Diego, what is your thesis on Tango? Very simple thesis. These motherfuckers have a massive, monumental amount of open interest, and they're cranking out fees, like few protocols. I believe if I mentioned yesterday, it was $18,000 worth of fees yesterday. 100% of fees currently go to stakers. All right, cool. Um, what else could I possibly say about the thesis? I think it is a cash machine. Um, that's that. I can't pull it up because you have to be on VPN to pull it up, but it's just literally a cash machine. A little bit of dip with regard to open interest is up at 570. Obviously, the market's pulling back, and this is a leveraged product. So it makes sense to have a bit of a pullback, but these fees are just massive. Total fees, $248,000. It's a little over a month and a half ish live, and it's already made a $250,000 in cash that gets distributed to us weekly. Pretty simple thesis. Pretty simple. Community is weird, but the code is solid. Yes, that is a true statement, and you're welcome. Mix, my friend. No, no. Listen, everyone's got to find their own path, and in the end, we'll all have our own journey, and we will all tell our stories in the coming years. And it'll be very interesting when we come back in the coming years, and I'm on a stream, and it's not just me doing a monologue the entire time, and it's not just folks asking questions, but it's folks that literally come back and have nostalgic stories about the, and it's a lot relatively large rational community. Because this isn't like a standard YouTube stream where you have commentary. And it's not a very normie type of stream. We are folks that literally talk the entire time. We have conversations in commentary form. But in the coming years, with the amount of folks that are part of this community, we'll have, I'm sure, pretty interesting stories. Timothy, too late to get exposure to DeFi. Aave Curve. Sorry if you got asked this a lot. Just starting to follow. Great content, sir. You're very welcome. Exposure. Everything's at a premium. A premium means you're paying more than you could have. And when you have premiums in crypto, they are not small. Some things could be at hundreds of percent premiums. Some things, so let's break that down. If you buy something at a 200, 300% premium, you are buying 70% less than you could have earlier. So, too late is a quote unquote phrase that we would need to break down because it's relative. Relative to where we were in September, not too late. These premiums and especially this dip right now, if this dip does continues to go up, okay. I see this dip as one of the first meaningful dip. Um, is this dip a higher low or compared to the next structural higher low? Meaning what I said with regard to Bitcoin. Is this dip, if you buy at 125 and it dips to 75, that structural higher low is lower than this dip? Just maybe a bad attempt at explanation. So if curves at 68 cents and below up top is $10 and it dips to $5, $3, $1, all right, so this is still not too late because that means this entry would be below the next structural higher low. I don't I don't suspect the next dip will be, I think the next dip will be too late. I think this is a now or never type of situation. Um, I think there's still a lot of premiums baked in, which means a lot of bang for the buck is lost. It's chasing, true statement. Definitely chasing the momentum, chasing the popularity late in that regard, where other people were earlier. So following the herd, so to speak, which isn't a bad thing. Sometimes you need attention to be placed on the market for shit to start to look attractive. So, it's not a specific answer to the question. It's more of an explanation of the situation, situational awareness, understanding where we are in the grand scheme of things. Buying at a premium irks me. If you could buy something and you're buying 70% less of it because of the price appreciation. So that is a hard choice, and we have to live with our choices. And we will come back at the end of 25 and we will tell our stories. So I hope that explanation helps, Timothy. That's probably the best I could do on the topic. Let's wrap it up for today. It's a Monday, December 23rd at 12:32 p.m. 181 people made it to the end of the stream and are now just that much more rational because of it. So I appreciate all of you guys and gals for sticking with being rational over the years. I think it makes a difference. Having a good story to tell, dinner table investing, you'll be able to tell some reasonable stories over Christmas vacation with the friends and family and not just talk about Bart coin. You might be able to talk about foreign exchange and credit and how crypto isn't crypto, it's actual fintech businesses. And people might look at you a little differently as compared to talking about Bart coin. So wish you all a good Christmas break, and I will see you guys and gals later this week. Till then.